Welcome to Independence Journey. In this video, I'll talk about why Palantir is a market disruptor with a huge growth potential. Palantir has been grabbing a lot of investors' attention, and for those who are not familiar with Palantir, it's a software company specializing in big data analytics. I think a major factor that brought about investors' interest in Palantir is its contracts with the government. Palantir has been working with government organizations such as CIA, FBI, and the U.S. Department of Defense. Receiving contracts from government intelligence agencies shows that Palantir owns top-level technologies for handling and analyzing big data. In terms of business, contracts from the government are usually for a long term, so Palantir has stable revenue from those contracts. Let's take a look at what Palantir does. Palantir offers three products: Gotham, Foundry, and Apollo. Gotham is a platform for needle-in-haystack analysis, according to the commercial CTO at Palantir. It's used primarily by government agencies that look for bad actors, terrorists for instance, hiding in complex networks. Foundry is a data integration platform built for the needs of commercial clients. It acts as a central decision support infrastructure by translating data into knowledge. Apollo is the continuous delivery software that powers Foundry and Gotham. Apollo brings the same SaaS, software as a service, platform to all customers, regardless of environment constraints. Palantir's products are used in various sectors such as AI and machine learning, automotive, cyber, defense, finance, health, and general data protection regulation. Data is playing an important role in everyday life already, and it's gonna be even more important in the future. Palantir has superb technologies in big data and a growing customer base, so I expect huge growth of the company in coming years. The CEO and co-founder of the company is Alexander Karp. He's an American with a Jewish background and studied at Stanford University. The chairman of the board of directors and one of the co-founders is Peter Thiel, one of the most successful investors of our time. Peter Thiel and Alexander Karp had been classmates at Stanford. Now let's take a look at the stock chart. Palantir's stock price has been very volatile because recently there have been lots of events for the company. In particular, there were Demo Day, the earnings report, and the lockup expiration. Palantir's Demo Day was January 26th. We can see huge price movements before and after the Demo Day. I have mixed feedback on the demos. The demo for Foundry was too technical and hard to follow for me. However, the demo for Gotham was interesting and impressive. I'll show you a short part of the demo video. I was so impressed. I recommend watching the full video at Palantir's website if you want to see more of how Gotham works. Then Palantir reported its earnings on February 16th. The company reported a loss for the fourth quarter and the stock price fell nearly 13%. The bright side, though, is that revenue beat expectations. I'll show you a part of the earnings report since I found something interesting. Looking at yearly figures, both revenue and gross profit nicely grew, even though cost of revenue also grew. However, operating expenses in total almost doubled in 2020. By the way, there are small notes on the items of cost of revenue, sales and marketing, research and development, and general and administrative. The note says, includes stock-based compensation expense as follows. Let's continue on to see how much was the stock-based compensation. In 2020, $1.2 billion were spent on stock-based compensation, whereas in 2019 it was only $240 million. It's about 5 times higher in 2020. Furthermore, if we go back up in the report, the revenue in 2020 is $1 billion, meaning Palantir spent more on stock-based compensation than its revenue. It doesn't look normal, and I think it was intentional. I suspect that the CEO and executive team wanted to shake out weak stockholders by lowering EPS. Finally, on February 18th, the lockup period of the stock expired. Lots of shares were sold that day. 3 million shares changed hands. Good news is that, on that day, ARK Innovation ETF bought 5.2 million shares of Palantir. Cathie Wood, the CEO of ARK Invest, runs 3 of the highest returning stock ETFs of the last 3 years. Her aggressively accumulating the stocks strengthens my positive outlook for Palantir. I wish I also could have purchased Palantir stocks on the dip, but I didn't have cash, unfortunately, in my trading account on that day. I bought some Palantir stocks at the end of last year, and I'll be waiting for another chance to add more shares of Palantir. Since the company have gone through big events already, I expect the stock price will be in an uptrend for the next few months. That is all from me about why I believe that Palantir is a market disruptor and why I like the company. If you've enjoyed this video, please subscribe, comment, and hit the like button, and also check out my other videos that you might be interested in. Thank you for watching.